Yeah, because 520 in Chinese means 我爱你, you know, I love you. Yeah. All right, so let's start. Today is 2025, May 20th. Okay, and let's start. Okay. So last week we mentioned that gold was forming a triangle, right? And we do discover this beautiful trade that, okay, to buy the structure breakout and pull back at 17110, right? Do you remember? Okay. And if for those students who catch this trade, we will be in a very, very good advantage, right? Because you already earned about 500 pips, okay, from 1710 to 1760. Okay, all you need to do is to take some profit, you book some profit along the way, okay? And when you find the price action shows bearish, you can close all of them, or you can close at least 70%, right? Not I love the money, yeah. I love you. Okay, all right, and now this week the gold has a very quick drop and from Monday, but it actually touched the previous support here, which is 1728, and formed a pin bar. So what does this pin bar tells us, guys? So in my webinar, I will not only give you guys the trading ideas, but I will help you to think the trading logic. Okay, what can you do when you see the price action shows like this? It shows force, right? It shows the rejection, yes, from the supporting area. Because when you look left, okay, you have to combine the price action together with the structure in the left. When you see a lot of buyers here, okay, can you see this buyer, and this super long pin bar, which also tells you this is good support, okay? And it forms another pin bar and then a bullish candle. So, and including yesterday, what I gave a trade is, yesterday we actually took another trade here, right? When the price breaks 1740 and pulls back, I said we can buy from here, right? Remember? And if you catch this trade, you actually already win a 2-to-1 reward and risk ratio, right? This is a very good trade. Okay, it actually goes to almost 3-to-1. Okay, and now we should take some profit of our buy because the gold has already touched the 618 area. Okay, you can see the 1750.49 has been rejecting the gold many times. Okay, so you should take some profit of your longs. Okay, and probably you can consider take a quick sell because it has break this channel. The recent rising channel was broken. You can see here it was broken and it pulls back, and now it's coming down again. So you can take a quick sell trade now, right? And aim the previous 618 level here, which is 1738. Okay, let's draw it. So this is what we can do now. Okay, we can take a quick sell, aim 1738. And when the price come back to this place, okay, you can consider to long again. Right? This is 1 hour chart. What we can do, okay? We do a rising channel, okay? Rising channel, broken, pullback, sell to 1736. Sorry, 1736, which is still now considered is about $10, 100 pips move, right? Okay, so that is possible. Okay, and another situation is if you do want to sell the gold in a very good place, you should consider 1760, this place. Okay, personally, I will feel to sell the gold from here will be a very, very good advantage, right? Because the price comes back to here and makes a rally, and then it may come back again, and in the final it will forms a harmonic patterns here. Okay, and if the harmonic pattern completes at 1760, I will try to go for sell, okay, to enjoy another wave of down. And this could actually push the price to 1720, which is here. Okay, the market is always like this. Okay, if you have the first fall, you have another correction, and if it completes the harmonic pattern, we could take a sell from here. Okay, so I think in this week, what we can focus is the sell from 1760. Okay, and another situation is if it come down first, okay, come down 1735 first, you can consider to take a buy. So we can potentially have two waves of earning. Okay, the first wave is a buy from 1735 to 1760, and the second wave is sell from 1760 to 1720. Right? Are we good? So this is what we can do for the gold. Clear? Is that any questions? If no, let's move on. All right. So the second thing we'll cover is oil. Okay, the oil just break out another triangle. So what we can do is we can consider to buy the low of oil. We can focus on to buy from here, which is set 32.80. We can use this breakout. Okay, price breakout, price pulls back. Okay, go for another buy. Okay, because it's confirmed it's a very, very, very nice uptrend. And in daily chart, you can see this is a inside bar, right? Inside the bar breaks up. Okay, so you can consider to buy the oil from 30.80. Okay, stop loss below 31 and aim 40, aim 44 maybe. Okay, because the oil has already completed a very, very nice V shape. Okay, this is a V shape. Okay, a beautiful V shape reversal. And now the uptrend is still continue. So let's go for a buy when the pullback happens. Okay, 32.80 will be a good place. Okay, and your stop loss will be set about here. Okay. All right. Okay, let's move on. Dollar index. Dollar index has a very sharp fall, so our short from the last week was also very successful. Okay, and I said the dollar has no fundamental support to go above 100. Okay, this reversal already shows it. The market cannot sustain this level. Okay, above 100, and then it actually gives us 3 continuous lower high. Okay, 1, 2, 3. Okay, and now it's coming down and almost break the wedge or the triangle. So we can focus to sell the dollar index to 96. Okay, at least. What I feel is it will perform in this way. Okay, consolidation, a sharp fall formed by a consolidation, and then break down, retest, go down again. Okay, so dollar index, I'm bearish. So for the euro dollar, you should take some profit of your long last week from 1.08. As I said, this is a very good support, and the price just break out this triangle nicely today. Okay, yesterday was a pink bar, right? But today it breaks new high. So by the definition of this trend line, okay, of the breakout, okay, today will be a very firm breakout. Okay, it's a confirmed breakout. So what we can do is go for 1 hour chart. You find any pullback to buy, and the best place could be 1.0960 here. Okay, use this structure as your reference to consider to buy the euro. All right. Okay, new high was created. Okay, you can see the uptrend, up, pullback, new high, pullback, new high. Okay, so this is a typical uptrend solution for us to catch the uptrend, buy the pullback, euro. Okay, 1.0960, and your stop loss should be below 1.0934. Okay, below this place. Okay, any questions? Euro, we are bullish and we want to catch the pullback to buy. Okay, set your stop loss below here. It's fine. Okay, because we don't want to see the price to continue to break down the 1.0930. Okay, that will actually consider be a reversal. Okay, so this will be the third trade that I'm giving today. Give me 5 if you understand. So far, so good. All right, cool. Okay, sterling next. Sterling, remember last week we are doing this sell, right? Last week, remember? In May 13th, I think Nicholas took the trade, correct? Nicholas took this sell. I said we can sell the sterling first okay, we took the profit of this 4, okay, and then we consider to buy at 1.20 or 1.19, okay. It didn't really come to the 618 level, however, okay, but the sell really gives us about 150 pips gain, okay. And on Monday opening, when you see this gap down, but the bullish bar starts form, and when this bar formed, okay, you should actually took your profit, okay. So this is still a very successful trade over the last week of the sell, and now it actually reversed, okay. And reversed, what we can do is we can buy the pullback at 1.2217 here, okay. Use this inside bar break up, okay. This is inside bar breaks up and retest and break new high. Use this level as a reference to buy the sterling, okay, buy the sterling, and that will give you a very nice entry, and your stop loss should be set below 1.2155. Okay, so sterling, focus on buy the pullback as well. All right, let's move on to Aussie. Aussie breaks new high, okay, very, very cool. Okay, in Aussie, we have plenty good supporting we can find from 0.64, okay, and the price shows a sideways market, okay, up and down, and when this channel was broken, okay, you should consider to buy, and now it breaks up again. So Aussie, immediately we can do a breakout and pullback buy. Okay, I will consider already pulls back because this is the wick here already touched this place. So you can buy the Aussie dollar straight away right now, okay, to catch the the next rising. All right, breakout. This is breakout and pullback. Okay, in 5-minute charts, it already pulls back. So already retest here. You can see here, right? You see that? The price already breaks up and pull back here. Okay, in just 1 hour ago, right? So the best trade of Aussie is buy from 0.6573 and aim 0.69. Okay, I will tell you a good place to take profit, right? It will be here. I think the Aussie will go up to 0.6823 here. This will be a good place to take some profit of your long, all right? So ready to capture this upside room, okay? Yeah, that will give you quite a good number of like 300 pips move, okay, to capture this move, and it just breaks out, okay. So as long as the Aussie can sustain above 0.65, okay, it will be safe to hold the long. Any questions? No, right? Good. Good. Let's move on. Kiwi dollar. Yes. What is the best strategy of Kiwi today or this week? Guess. Anyone? And I think I have already mentioned one time in my last webinar or some time some ago, okay, some day ago. Okay, the Kiwi and Aussie are performing a very similar way. Okay, Khan said question, will be releasing any new videos for your course? I'm already in your course. The new videos was already released to all my students. Yeah. So whenever I have update of the new course content, I will just share to other members. Right? Okay. Okay, because Aussie and Kiwi has similar similar pairs. Okay, similar pairs. So what we can do is we can go for the compare tool of TradingView. Okay, you click add symbol. Okay, do not use compare, use add symbol, and then you choose Aussie. Okay, and unclick this this check of overlay the main chart. Okay, make sure this click is empty. Okay, make sure this window is empty, and you go enter. Okay, let me show you what we can do is by observing the Aussie's movement. Okay, you will actually find a almost 99% correct trade. Do you believe? Why do I say this trade could be 99% accurate? Because when we're doing the comparison, okay, let's put a remark of this vertical line here, okay, and we discover the Aussie, okay. The Aussie has already rise from the lowest point to almost here, right? Do you agree? To this candle. Remember, okay, mark this place. Aussie already break out of here, okay? But where's Kiwi now? Has Kiwi already goes to this level again yet? Did the Kiwi already come to this level? Yes or no? No, right? And you know the Aussie Kiwi is a similar pair, similar movement. So if the Aussie can successfully reach to this point, will it be a very, very high chance for the Kiwi to reach to that level as well? It's not near similar with S&P, okay? It's actually the Aussie and the Kiwi are definitely 90% correlated, okay? Yes, you can buy now. And I can tell you that this 0.6157 to 0.6294, this 130 pips is almost for sure. Okay? Because these are similar pairs. They are 90% correlated. So if Aussie can feel to this, can rise to this high, 99% chance the Kiwi also goes to this place. Okay? So let's just mark 0.6290. Okay? I can tell you this trade could be 99% accurate and you will easily catch this 130 pips move. So are you interested? Raise your hand. Anyone want to take this Kiwi buy? Yeah. Okay, if you want to buy, just go for it. Okay, but make sure you do not overtrade. Do not risk all your money. Okay, you can just set the stop loss below here, 0.60.40, right? 0.66040 at the lowest of this bullish bar. Okay, and this room is almost guaranteed. Yep. And if the Kiwi if the Aussie can continue going up, I think you can just hold. You can hold the Kiwi, all right? Because now the Aussie dollar will be the leading indicator for Kiwi. Okay, so remember the conclusion. Okay, when Aussie goes up faster than Kiwi dollar, than the Kiwi, okay, then the Aussie is a leading indicator for Kiwi. That's why we can buy Kiwi, okay, by watching what has Aussie done in the past. Okay, so this is a very, very good strategy. Okay, you can apply the strategy, okay, in the stocks market as well. Can anyone tell me what is highly correlated stock shares with NVIDIA? Name one. Amazon? Not really. Intel, maybe. Yes, Nicholas, very good. AMD, yeah. Because both these countries, these companies are making the graphic cards, right? The computer, the graphic, the processors, right? Okay, NVIDIA and AMD, right? They are still the top two brands in the all the computer components of the graphic card. Okay, so by the way, let me just make a declaration. Okay, I have never watched the NVIDIA and AMD charts this week or last month. Okay, it's been very, very long time ago since I watched these two stock shares charts. Okay, but let's do a comparison, right? And I think we should find a similar performance. Okay, so let's go for NVIDIA. Okay, this is NVIDIA. Okay, and let's compare with AMD. You will find these two companies are moving in a very, very similar way, but the price is different. Oh, here it goes. Here it goes. Okay. Can we observe that they actually have the similar highs in February 19th? Do you agree? Do you agree? Yes or no? Yes, right? And we do observe another almost equal high in May, correct? In April here. April 17th and April 29th. They are doing the same way, right? But now here's a difference. The NVIDIA already breaks new high. But where is AMD now? Guys, is that interesting? Has AMD breaks new high? Yes or no? No, right? Okay, so can we do a prediction that since NVIDIA breaks new high, and we do believe that AMD will follow the same way to break new high, break 59, right? Okay, it will actually break 59, and the percentage of AMD, it actually rised about $50. So let's do a percentage calculation. Okay, it actually breaks new high by about 16.74%. Okay, so we may not expect the AMD to go another 16%, but I think 10% would be okay, right? So let's just move. Let's just measure it. Okay, from here. Okay, from here. Okay. When it breaks new high, it moves 22%. But where is now? Now still not yet touched the previous high. So can we buy AMD now? Can we? Or do you think it is wise to buy AMD and just aim the previous high because the NVIDIA already breaks new high? And if you consider to buy the NVIDIA now, you're actually getting a very, very expensive price. But the AMD are still not yet break out. Yes, I'm recording. Okay. So this is look top left of screen. What do you mean? What is the top of the screen? Yeah, I'm recording. I know. Yeah. Thanks for. Yeah, red button means recording. Yes, you see the red dot. Okay, so this is a good example of using the similarity. Okay, of the similar stocks. Okay, so let's go for another. Let's go for another. Yeah, here. Okay. We can know that the NVIDIA has a peak at a 293 in the year 2018 September, okay, and NVIDIA has a peak here, and AMD has also a peak at a 34 at the same time. Okay, this is the same time. Okay, okay, and watch this. When does the AMD breaks the new high? On November 19th, right? So if we are applying the same strategy and the AMD breaks new high, okay, faster than NVIDIA, right? Because at this time, the NVIDIA is still lagging by this much, okay, by this much. So we can use the AMD as a leading indicator to capture the NVIDIA's next move. So you can immediately buy at here, okay, and aim the previous high. Okay. Is that simple? Quite effective, right? Because they are the similar companies, and one company breaks new high, yeah, very high likely, and the other company will follow the movement. Okay, has anyone understand the logic behind this? Mammy says very interesting, yeah. Okay, so you can use this similarity or correlation, okay, to find those good pickups of the stocks. Okay, because when AMD already breaks up, okay, if you think, yeah, the breaks new high, it may have a pullback, or it may, I don't know where's the target, but this target is confirmed, right? The NVIDIA's target is confirmed, so you can easily capture this move. Okay, at least aim the previous high. Raphael says very useful knowledge, right? Okay, good. Okay, yeah. So you can just do some comparison of these similar pairs, similar products, and you will find some interesting facts. Okay, so what I'm suggesting is we can consider buy the kiwi, and aim at least here, okay, to get this 130 pips move. Okay, now dollar Canadian, what do you feel of this? Can you make a prediction? What will happen next? Or what can we do in the next move? Yes, no, not a buy, because this place has been tested too many times. And if the oil continue goes up, the Canadian dollar will appreciate against the dollar. So what we can expect will be a nice breakout, a breakdown. Okay, you're actually expecting a breaking out candle. Okay, a red candle breaks this 1.3840 level and pull back, you go for sell. Aim for this gap. Okay, and again, I will use the oil to give you a comparison. All right, it actually goes to the same logic. So when we do trading, okay, not only will we have to focus on the fundamental, but also we have to focus on the technology, the technical analysis. And yet, if you still have some correlation skills, right, it will actually give you a better or a higher percentage of winning. Yeah. Okay. So let's do this, right? We know that the oil and the dollar Canadian are highly correlated in a reversed way, right? Am I right? Okay, you can see that when the dollar Canadian goes up, the oil goes down, right? Okay, so let's find some similarities. Okay, here, when the dollar Canadian has a break up, a gap up, and then followed by 3 candles sideways and then goes up, right? And oil did the same movement. Okay, it actually has a nice breakdown of this. Okay, and then followed by a 1, 2, 3, 4, 5 candles of sideways, and then oil goes down. Okay, makes new low, and dollar Canadian makes new high. And since then, the dollar Canadian has a correction. And what does the oil do? It also has a correction, right? Am I right? Can you find this the similarities? They are doing in a negative correlated way, right? Okay, but the interesting comes here is oil already covers to here. Has the dollar Canadian cover here already? No, it still has this gap. So can we short the dollar Canadian? Can we? Because oil already comes back to this level, but the dollar Canadian hasn't. So yeah, go for sell of dollar Canadian, and let's go to the 4-hour chart. We want to sell, right? Okay, you see the oil breaks new high. Yeah, just right now it breaks new high, but the dollar Canadian still not breaking, but it will break. It will break sooner or later. Okay. All right, so you can use the same strategy over and over again to give you another another dimensions of trading ideas. All right. Okay, good. Yeah. Okay, let's go for Bitcoin. Okay, the Bitcoin has already touched 10K. Okay, 10K is previous structure here. Okay, so I would suggest do not buy at this place. The best place is still be 7,800. Okay, 7,800. So wait for the price to come back to test the structure and to buy it again. Okay, another way is wait for a breakout to happen and pull back to buy. Okay, so there will be two potential buying chance for the Bitcoin, which is the first one, breakout, pull back, buy, or come back, pull back to here, 7,800 to buy. Okay, so this is the outlook of the Bitcoin. I will focus on these two scenarios to go for the trade of Bitcoin. Canadian yen, okay, sure. Canadian yen is definitely a buy because the overall, the very long-term consolidation has been ended. And what we should focus is to buy to capture to 80.54. Okay, you can use a 4-hour chart. You can see it actually already tested neckline. Okay, going up, break up and pull back 77.16. Okay, so as long as the Canadian is above this structure, you are okay to buy. Is that clear? Is that clear? Because this is a very, very long-term consolidation. And by the observation of dollar Canadian, we know the Canadian dollar will appreciate against the dollar, right? And if dollar yen also goes up, I think the Canadian yen will just shoot up. Can you tell the stop point? Okay, then I have to ask you a question. Okay, have you listened carefully of my words? Okay, what do I mean by saying as long as the Canadian yen is above 77, what does this sentence mean? As long as the Canadian yen is above the structure, we can buy. It actually implies if the Canadian yen breaks down the structure, do you still want to hold the long? No, right? So that's right. Yeah, you actually set your stop loss below this pin, okay? Just below the structure, use the pin bar, use the wick to help you to set a stop loss, yeah? Is that simple? Because you don't want to still hold the buy if a bearish candle touches your stop loss. Tell me something about Euro sterling. Okay, I will say do not trade Euro sterling right now. Why? Why? Because the euro and sterling moves in the same direction. Okay, if euro goes up, what will happen to sterling? Oni, answer me. Yeah, think about it. If euro goes up, what will sterling do? Most likely, will sterling goes up against dollar again? Weak? No. Why? Why the euro goes up, the sterling must fall? No. Because when the euro goes up, okay, it goes up versus against dollar. Okay, means dollar is weak. Okay. Okay, if euro goes up, means the dollar is weak. And if the dollar is weak, the sterling versus dollar will also go up. Okay, they are moving in the same directions. So if you buy if you trade euro sterling, for example, you took a buy, okay? If you buy euro versus sterling, what are you really doing is, okay, you are buying euro USD and shorting sterling US dollar. Okay? Am I right? Because you buy the euro and you sell the sterling, right? You are buy the euro and sell sterling at the same time. But you know, if the euro goes up and the euro goes up a lot, okay, sterling most likely will also goes up. So your euro dollar up will give you money, which is a plus, or maybe 2 plus. Okay, but your shorting sterling will give you a negative profit, and you actually cancel each other. All right. Okay, so do not buy euro sterling or sell euro sterling when the dollar is very weak or dollar is very strong. Okay, you can consider to buy the euro US dollar or buy the sterling dollar, but not buying euro versus sterling, because when you trade, when you take this pair, it has no movement versus dollar, not correlated. The euro, the dollar was canceled each other. Okay. Okay. For example, if you see the euro sterling's chart, yes, I agree with you. The euro sterling may go up, right? But what is the room of these pairs? May only have about 100 pips. Okay, but if you trade euro up and you trade sterling up, you actually earn maybe 400 pips. Okay, so it is not wise to buy or to trade euro sterling. But I will tell you, yeah, the trend is still up, which means the euro is strong than sterling, right? So if you have the same amount of money, which pair are you going to invest in? You know the euro will be stronger than sterling, and you only have this 2% risk per capital to go for one trade. So will you choose to buy euro or will you choose to buy sterling? Of course, I will choose to buy euro because euro is stronger. Euro will move faster, right? Because why do I say this? Because euro sterling is in uptrend. But when euro sterling comes to 0.90, it will have a big resistance, correct? So the profit room of euro sterling was limited. However, the euro dollar will have a higher, larger room of profit. That's why do not trade euro sterling right now, okay? Focus on trading euro versus dollar or sterling versus dollar. We will give you more benefit. All right. Okay, move on. S&P. Okay, S&P has a reversal signal last night, and today it actually trying to break new high. So let's go to 30-minute charts to see whether our trade will be successful. Okay, so here what we can find is we can find almost I think this is a cipher pattern here. Okay, this could be cipher pattern, right? It tells me, yeah, you can sell this S&P by choosing the stop loss at the previous high. Okay, setting the previous high of the stop loss and to try to capture this move. Okay, it also has already hit the 88.6% retracement, and now in 15-minute charts it shows a breakdown. Okay, this is very good chance to sell the S&P. Okay, sell it. Okay, sell the high. Put your stop loss above the previous high is enough. It's enough. Okay, we are just risking this much. Okay, but it may go down to here. Okay, or here or previous here. I think the support is coming from 2923. So when you already capture this move, take some profit. Right? If the 2913 was broken, it will actually for more. Does it mean not to do that kind of trade at any time because sterling and euro dollar move similarly? No. So yeah, I think I already mentioned in the previous webinar. Okay, so do not trade similar pairs. Okay, when dollar index is in trending market. Okay, it's trend. Okay, but you can consider to trade when the dollar index is in sideways, right? Because if dollar index not move, the euro will move by itself, the sterling will move by itself. So if you trade the euro sterling, may give you an extra bonus. But when the dollar index goes up or goes down, the euro, both the euro and sterling will do the similar way, and there's no point to trade euro sterling. Are we clear? So basically means when the dollar index is in sideways, okay, or dollar index no change, okay, you can consider to trade euro sterling. Okay, I think we have already covered all of the major pairs and the major markets. Or your pullback, yeah, good. Makes sense. I love this. Okay, so just watch the price action. If the sellers cannot break 30.50, go for it, right? So just watch for the price action to ready to take another buy from here. Okay, this is a good place of buy. Okay, but if the price goes penetrate the 30.50, okay, you hold for a while, you watch for the price action first, okay? Yeah, so watch for the closing of this 30-minute charts, I think. Okay, 30-minute charts, you can consider this as pullback. If this 30-minute charts cannot break new low, okay, just go for it and put your stop loss at below 32.45. It will give you a good entry and you may quickly have some profit. Sterling yen, okay, sterling yen. All right, sterling yen is similar of sterling dollar because it actually goes down to 129.28. Okay, it has this downtrend channel. Okay, and it was broken. So we want to focus to buy the pullback. Okay, you can use the 618 to help you to determine where you want to go. Okay, which is 132.54, this level. Okay, use 130.54 to help you to take a buy trade of sterling yen. Are we clear? Yep. All right. So along this way, we have observing the market, okay, day by day, week by week, and I'm quite satisfied that so far we are still in a very profitable running, okay, of the trading, and yeah, just let's just continue to do this, okay. We just continue to find good setups, okay, use a good stop loss and good entries and good position size to do the good trade. And this Swiss franc, why do you want to focus on cross pairs? Why? I won't suggest traders to go for cross pairs if they are not very good at the major pairs. Okay. If you ask me Canadian Swiss and all these Swiss, okay, I will tell you, yeah, the major trend will be up. Okay. The big trend is, okay, try to buy the Canadian Swiss franc, okay, and aim 0.72, okay, it will go for this level, okay, but you will find it's very hard for you to tolerate with this kind of a sideways markets, okay, and it's high, the volatility is really high, you know. You may be confused, it's going up or going down, okay. When you think the breakout happens and the next candle is just reversed 100%, it will be very hard for you to get a clear trend, okay. But Canadian Swiss franc, I do want to buy, okay, and the reason is I think the Canadian dollar will goes up, okay. So if that happens, I think you focus on dollar Canadian, or you focus on oil, or you focus on Canadian yen will give you a good place. All right, Aussie Swiss franc, yeah, I think I mentioned that 1 month ago. Okay, when Aussie Swiss go to 55, I said we can buy. Okay, it just moves similar as Aussie dollar. So why not choose Aussie? Why not choose Canadian? Why do you want to choose Aussie with a Swiss franc? It moves slower, okay, because the pips value is lower, okay, than the dollar. Sorry, it's same, almost the same as the dollar, but the volatility is lower. Yeah, we can use the ATR. Okay, you can use the ATR. Okay, let's go to weekly chart. Okay, this is a move of dollar Swiss. It's 0.0178, which is almost 178 pips of the dollar Swiss. Okay, and if you go to Aussie Swiss, okay, it's about 0.01881. Okay, in daily chart, it actually has slower move in Aussie dollar. 80 pips per day. From 0.55 to 0.63, it only moves less than 1,000. Okay, but if you compare to Aussie dollar, it moves more than 1,000 pips. Okay, right? You see, Aussie dollar has 90 pips gain, 90 pips of the ATR, but Aussie Swiss is lesser, only 80 pips. So which means if you trade Aussie Swiss franc, you actually earn less, okay, than Aussie dollar. Dow Jones, okay, the indices actually moves in a very similar way. So Dow Jones, if S&P want to sell, Dow Jones of course want to sell. It's just the same patterns, right? First top, second try, not breaking new high, touch the 618, go for a sell, okay? Put your stop loss above the previous high. That's it, okay? But Dow Jones, it will be quite expensive contract. It's 24,000, okay? So I think it would take you higher cost of trading Dow Jones. So yeah, unless you love trading Dow Jones, otherwise I would suggest you trade S&P. It will move smoother, okay, than the Dow Jones. All right, good. So let's end the webinar today. And now, I think we have covered a lot of pairs. Okay, so plan your trade and trade your plan. Right, and if you want to learn from me, okay, you can go for my website of harmonicasia.com, okay, and go for my course, and welcome the 3 new students come, okay, in the last week, okay. I think one from Thailand, one from UK, and one from Singapore, okay. Good, so let's welcome and wish you guys a good learning journey along the way, okay, because my course really tells you a lot of good stuff, okay, give you a very, very good hands-on of trading smartly and trading professionally, right? Okay, thank you, bye-bye, see you next time.